Hello, friends and traders, and welcome to the Limit Up Podcast. Dan and I are out today for what I have to assume is a very important meeting of some kind. But in the meantime, we reached back into the archives and found this episode titled, Your Most Common Trading Questions. Hope you find that interesting. We'll be back next week with a new episode. Until then, have a great rest of your day and trade well.
And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Hello, traders. Welcome to Limit Up Podcast. I am Dan Hodgman, and this week we're slightly back to normal. We got Jack back in studio. Jack,
Hello.
welcome.
Hey,
and
glad to be back.
We got Eddie Horn. Eddie, how are you?
What's up, guys? How are you today?
Good. Sorry, Jack, I totally cut you off as you were saying something there.
No, that's fine. I've come to expect it at this point. Welcome back, Jack. Now shut up.
Exactly.
Yeah, no, it's great to be back. I'm tired of being on the road, especially with a young child. It was awesome, but the moving around part, not so much.
Hey, I feel you. I am officially settled for the first time in 2 months. I'm pretty pumped. You guys can all see I have a good microphone. I'm excited about that one.
Yeah, nice brick too.
Yeah, it's an old 180-year-old loft building that I moved into, so I'm pretty pumped.
That's very nice. Well, speaking of lofty,
let's talk about these
today.
markets, huh?
Yeah, talk about the markets. Talk about oil.
All right, so I got to touch on oil. Guys, how many times have we talked about that $95 level in the oil market? That market opened up right at 95. It could not accept above there. Broke down really strong here today, all the way down to 92.50, a little bit lower from there. But all day long, downtrend market. And like we said, we opened up right at 95, right around settlement price, which is where settles were yesterday. And initial move was lower. It attempted to come back, but it could not get back above settlement price. And what does that tell us? Settlement's going to be one of two things. It's going to be a catalyst in a direction, or it's going to create a bounce. And once that market moved through settlement price, it became that catalyst in that direction. So really good downside opportunity there. Equities, on the other hand, were not downside moves here today. Strong up moves in both the S&P and the NASDAQ. I liked it off the open. Off the open, there was an initial knee-jerk reaction, looking lower, did not accept. It came down to the standard deviation right off of VWAP. We got a nice little bounce there and a nice trend up. But what I really like seeing in both S&Ps and NASDAQ was that initial up move. It came and checked overnight highs, and we got a quick rejection. So you had two really great opportunities here in the equity markets, whether you're a range-bound trader or you're a trend trader. If you're a range-bound trader, you were looking at that overnight high all morning, waiting for it to get there, and you were looking for a good short with a cheap opportunity. You got both that in the S&P and NASDAQ. If you're a trend trader, you're looking for a weakness in an uptrend market. Now, over the last couple of days, we've seen both these markets trending higher, and we got that opportunity there as well. So that weakness that got the shorts for range-bound traders also created the weakness in the trend up. So good opportunity there. Gold was relatively sideways. Jack, I see you're going to talk about equities.
Yeah, I was going to point out, I've been setting up stuff. I am at my parents' place right now with the baby when my wife's out doing something. So I was setting this up, so I didn't see the last hour. It looks like there was a little squeeze in equities upwards for power hour. I think that's haven't seen too much of that in a while. So you think that's just people getting squeezed out, or maybe something a little more?
You know what I think it was, Jack? I think you had a number of traders holding on to the shorts from this morning because they were looking, again, if you're a range-bound trader, you're looking to come and check the other side of range, and that market did not come check that other side. So they were holding on, seeing if they could check that low, and eventually got shaken out, and the longs overpowered there.
Yeah, well, like to see that.
All right, so
4,200.
There we go. My retirement fund would like that one. Like we said, gold worked sideways, euro down right to settlement price, and settlement became a nice little shelf for it there. and yields are down. What does that mean for bonds and notes? Bonds are going to be up. So we had a nice little rally here in the 10-year note. So good opportunity across the board, some directional moves, some sideway action. So per always, look for every opportunity you can and always hypothesize what happens if I go long, what happens if I go short, and what happens if the market's going sideways.
Yeah, this is exciting stuff. We got one more week before the final holiday of summer. We're kind of in the dog days of summer, and hopefully things pick up a little bit as we go into the fall, which is traditionally one of the busiest times of the year. So looking forward to that. We brought Eddie in today. Eddie, hello. Eddie Horn, why don't you introduce yourself to everyone out there who might not know who you are and what you do over at Topstep?
Hi everybody. I'm Eddie Horn. I'm sometimes you might have seen me as the tall, short, fat, skinny guy. What I do at Topstep, I've been there for a very long time. I've probably just about done everything. Everything from answering phones to helping traders to sweeping the floor. So it's just about everything. But it's really cool to be here, guys. I appreciate the invite.
Yeah, and specifically, the reason we brought Eddie on today, too, is because we have a cool topic. Eddie spends a lot of time talking to our traders. He does a lot of the funded trader interviews recently, if you've seen him. He kind of, if people want to know more about the program, you can set up a meeting with Eddie and he'll talk to you about it. And so today we thought that we could do a little common trader question thing. And Eddie, I was kind of interested to start off of kind of what are the most common questions you see from futures traders who set up a meeting with you or reach your desk?
Okay. Well, Jack, basically, if they're reaching out, 100% respect to them, because a lot of traders don't think that they need to reach out to anybody, and they find out, the hard way. Usually it's something where they're very confused, and the question is, what am I doing wrong? First off, we've got to filter out some things. We got to find out, products they're trading. Am I trading the right product? Am I watching the charts correctly? Sometimes time frames, a lot of times, as a matter of fact, time frames are just too fast. Products are too fast. You got new traders trading NASDAQ with 5-minute candles, 1-minute candles, and it becomes a blur. So, what we try to do is we try to sort of dissect what they're doing, put it on the table, break it down, and see what they're doing. See if we can improve what they're doing. A lot of traders, they'll talk about, I can't take a loss, and we see that much too often, where you need to have a shutoff valve. You need to have your own personal loss limit. A lot of traders tend to dig a hole, and then they start rolling the dice. They start flipping a coin and hoping to get out of that hole. And the thing is, they keep digging that hole deeper and deeper until they break a rule. And that's one of the things. Another thing, sometimes it's just fine tuning. Just a little fine tuning. Like I said, when we break it down, we'll see what's going on. I'll look at the trade report, see what they're doing. And it all comes down to just a good old fashioned talk, one-to-one, one-on-one, mano y mano. And most of the time, traders are, going in the right direction then.
Nice. Well, let's dig into this, Dan.
I wanted to say
first, just for organizational reasons, as we discussed this today, as I talked to Eddie before this, and he noted that the three parts that are most brought up involve the approach, management, and mindset of the trade. So we'll get into that. And Dan, go ahead and shoot away.
Yeah, I was just going to say, so I don't want to give any of Eddie's hints away, but I had a chat with Eddie the other day, and something for traders out there that if you are struggling with the speed and the approach to some of these markets, give Eddie a call, because he came up with a phenomenal analogy that I now think about pretty hectically. And so as Eddie was just mentioning, looking at the 1-minute chart in NASDAQ, I instantly went to the analogy that he gave me the other day. So don't hesitate to reach out to him.
Absolutely. Well, as we talk about the approach, Eddie hit on that, is the idea of, is a market too quick? Is the candlestick too small? And, we have the stats here. A fairly large majority of our volume at Topstep is done in the NASDAQ. And I don't think there's anything inherently wrong with trading the NASDAQ futures, but I think you have to realize that that's a very whippy, somewhat illiquid, a lot of noise in it product. And you have to take that into account with your trading strategy, because if you look at too short or start, if your stops or profit targets are too small, you're going to get chewed up before something has to work. And Eddie, it sounds like you've talked to a lot of traders that's happening to.
Well, yeah, I think the analogy that Dan was talking about, it's a lot of these traders, if you're familiar with racing, Formula One, NASCAR, I mean these cars go pretty fast. Now, if you were in the first row, and these cars are coming by, all you're seeing is a blur, zip, 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 and you can't define the number, you can't define who's winning the race, you can't really define anything. So, I mean, the approach is you move back and scale back your time frames. Move up in the bleachers. All right, move up in the bleachers a bit. Turn that 1 minute. Test it at a 5 minute. Test it at a 10 minute. What's comfortable? 15 minute, possibly. But what you're doing is you're seeing the race, or you're seeing the market much better. Now you can see them coming around the fourth turn. You can see all the numbers on the car. You can see the sponsors. You can even wave at them. You can see them turn around turn one. So that's what you have to position yourself at, where you can actually, when you're looking at charts, the charts are telling you a story. If you're looking at your dome, you sort of zoom in a little bit, get a little more detail. But that's some of the problems that a lot of traders have.
I do love that analogy. And we see so many people who are getting, taking a trade one way, where if you're not zooming out, and we go beyond that, I would say 15 minutes is, the lowest time frame I look at. Start looking at the days, way back, go back a year on these products, right? You have the continuous contract in your charts, because you see a lot of times people will be fighting against a massive level from a month ago or 2 months ago or something like that, and based on something they see on a 5-minute chart. And
Right.
that's just not a strategy that's going to pay dividends in the long run. Dan, I know you have a very long term.
I like long term. I mean, 30-minute, 4-hour, daily, weeklies. That's kind of what I'm looking at. But what I like, what Eddie just said there, and I want everyone to hear, it was like, take the slow approach. Don't go from a 1 minute right to a 30-minute. It can be very confusing because you're used to that fast pace. So slowly build into it. Go to the 5, go to the 10, go to the 15, like slowly get there. And I think it's going to make this whole process of transitioning and adjusting your trading a lot easier. Because if you're diving from a 1 minute to a 30, you're going from, we've all been there when we're driving through the school zone, and we're going from a 45 into a 25 school zone. It feels like you're barely moving. And then all of a sudden you got to jump on the highway and everyone's doing 80. And you're like, holy hell, what the hell just happened? Oh my God, they're flying.
Yeah.
Like, you feel it. So if you can slowly build into it, it makes it a little bit more comfortable, and it's not initial shell shock.
Yeah, I think that it can apply to not individual trades, but what you're doing in your first trading session. But another thing we see way too much of is people dive into the trading combine and will damage their account, or, God forbid, blow out their account, on the first day or the first couple days. And that's sort
Yeah.
of the same concept of getting on too small an interval, right? You got to, Eddie, I presume that probably rings true.
Yeah, I talked to a lot of traders that have been through the funded program, and it's very disheartening, and a bust of confidence when you work so hard to get through the combine and you get funded and you lose it that week. It all stems down to greed. It's you've reached the promised land. You're there. Now you got to understand to really slow things down, because there's not a profit target. All right, there's not a consistency rule. It's time to just sort of take what the market gives you, rake in $50 a trade. Okay, take it as it comes. And a lot of traders are just looking to hit the home run, swinging for the fence, and not using that same strategy. Just get on base.
Yeah, I think that there's also, from a strategy end of it, is you want to trade in the combine the way that you eventually want to trade in the funded account. There's nothing wrong with using a reset or something like that, but also getting a fund account is kind of the beginning of this, because the goal is not to get funded, it's to get an account and grow it and make some money. And if you're using a strategy where you're just, say, hammering a reset or something like that, I'm not sure what the end game is once you have a funded account, right? It would be like, say I had some kind of cheat code as a base, as like a golfer where I could have, infinite mulligans or something, and then make it at a PGA tour and they're not allowed anymore. It would just not work once I got to the competition, right? I could
Right.
be incredible on the simulator, but then what's the point if when I get there, I'm the worst golfer? I just want to make sure I didn't freeze there as well. Dan?
I froze, lost internet, everything just stopped working. It just came back. So I've missed the last 30 seconds. So
Press
you're
go.
just
You missed a
brought me
great
right
golf
back.
analogy. What's new? I said you don't want to be over reliant on a reset or something like that as part of your strategy to get to a funded account, because then
Jack,
when you're in there,
you're spot on. I remember what I was going to say, and then I got distracted by losing internet. You made a comment where like you want to come into like the trading combine with the strategy you want to use when you're trading live, when you're in the funded account or in your own brokerage account. And I think a lot of times you come into it with the expectation of like, okay, let's just get through the trading combine and get to funded, when we kind of forget the trading combine is a great educational tool to kind of get comfortable with the markets, to tweak that strategy in a safer environment.
Spot
And if
on.
I think if you come in with the right approach, like you were saying, like I'm going to trade in the trading combine as though I'm going to trade in the live account, because you can power through, you can have that quick home run like Eddie was talking about in the funded account, but then you can lose it really quickly. And then you got to start back over, where you can avoid this process of having to go back into the combine, start slow in that funded account, trade slow in the trading combine, slowly build. And next thing you know, like we have a trader right now. She's been funded for months and months and months. And I swear every other week I'm processing payouts for her. Like it's phenomenal watching her chip away. And they're not little payouts. I mean, they're four-figure payouts. Some have been five, no, I think most of them have been four-figure payouts, but it's like every 2 to 3 weeks, big chunks of money going her way because she's slowly chipping away.
So Eddie, I'd be interested as far as some other questions as we delve into the mindset kind of portion of it is, besides what we've discussed so far, what are some other questions or things you've noticed as far as mindset? For example, one for me is people always want to trade. And this is true when I was trading professionally too. Everyone always wants to trade more size. And I feel that is the wrong way. The first place you should look at is like, can I make more by holding the trades longer, for instance, or having a better risk reward ratio? Or I see people kind of talking about that sometimes. So have you seen anything as far as trade size going on?
Well, I mean, that would be sort of, I think, under management, managing yourself, managing your account. Like they say, if you can't trade small, you can't trade big. And it goes with the territory too. This is something you've got to test as far as size goes and so forth. And we're always telling traders, start small, build a foundation. You've got to build a foundation before you start building a house. And once you've got those small profits built up, then you can start opening up things a little bit better. You can start adding a couple contracts here and there. You can open up your risk a little bit more. You can have your stops a little bit wider, but you first got to build that foundation before you do anything.
Nice. Ever taken any super strange phone calls? Just kind of curious.
Super strange. Super strange. I mean, I've talked to thousands of traders. I don't know. I guess if I get a super strange phone call, I just sort of dial it in and answer their questions.
If you do,
I'm here to answer questions, man.
I'll tell you, I had one years ago when I first started. Trader thought like someone was stealing his trade ideas. So he, no joke, was like putting tinfoil in his office because he thought people were stealing his trade ideas.
I think I remember that one.
Dan, I appreciate that you are saying that out loud. With Yeah, exactly. Well, I mean, I hope it worked. I mean, if tinfoil is part of your process and it helps you, some people have meditation, some people have conspiracies. It all works out.
Well,
Um,
that's, I think, the greatest thing about trading. I'm a sports guy, it's always been superstitions. I kid you not. I had a hockey game when I was like 12 or 13 years old. It was my first ever hat trick. I played defense. We're not scorers. It was my first hat trick. That's 3 goals in a game. And before the game, my dad got me Starbucks espresso, double shot espresso, like cold drink, because we had been going all day. I was exhausted. And he's like, here, take some espresso. So
Play offense and
through
defense.
through college, before every hockey game, I drank a double shot Starbucks espresso before every single game because of superstitions. I put skates on a specific way. Like when I came to trading, it was the same process. I would come in the exact same door. Even if there was a line at the one revolving door and the other one was empty, I'd go in the line one because I had to go that way. And then I'd come in the back way so I could go up the first flight of stairs instead of taking the escalator. Like we all create these superstitions and beliefs. And that's part of trading. That's what I love about it. Like you find that little weird thing that works for you and you just never give up.
right. It's all about the routine.
My dad wore the same pair of khaki pants from when he was like 23 years old on an unemployment Friday. And he wore them all 30 years of his career.
On Friday?
Because they were on unemployment Fridays because they were his lucky pants. And my dad did this for 30 years. They fit well when he was young. They didn't fit so well when he got older.
I was gonna say, there's not the slightest chance that I could fit into. I was just looking at some pictures of me when I was 23. We were looking for trading pictures the other day. It's like, not quite. No, that's fun. It is all about these. You talk about superstitions, but it's all about a routine, and the Athletics are a good example of that. I feel like also I was half joking about the super strange phone calls because it can go both ways. Like as long as you're disciplined in your approach, there's some complete, it takes all kinds. There's some like complete wackadoos who are some of the best traders that I've ever met, right? It kind of, wherever you're coming from, you can. And I think sports is kind of like that too. Like, I don't know if you remember Carl Everett used to play in the White Sox. He didn't believe in like dinosaurs and stuff. But he could hit a baseball, right? And that's kind of what I feel about trading sometimes.
Danny, being on the trading floor, man, there was a lot of characters.
Yeah.
And I mean, if you had the opportunity to be on the trading floor, I mean, each little pit was like a little village, and they had their own little rules and their own little things. And I mean, you watch some of these videos where they've got like, it's a fast market. I mean, a lot of these guys, they were unique, and a lot of these women were too. I give big props to the women that were in the middle of it because Danny, it was kicking, punching, screaming, scratching, cussing, sneezing, coughing.
Paying someone $50 to eat a pack of cigarettes. Yeah.
Well, you know what? Maybe we do a podcast about those because I got stories we
only have 7 minutes. We've been talking to the lawyers for a while about that. Not really, but like that's I'd want to have pre-clearance of all these stories before they happen. But that's definitely one that I've heard along the lines.
A pack of cigarettes, right?
Yeah, but I wouldn't recommend it. Don't smoke them. Don't eat them.
Right. And this routine, it all falls into the same thing, the mindset, right? Like if you tweak your routine, what are you thinking about when you sit down to trade? You're starting to think about that difference that you just did this morning. And that's where your thought is. Like, I know for me, like if I, pun intended, literally get off the wrong side of the bed, like let's say I rolled over and I decided to step down on the other side, I'm thinking about that weirdly when I sit down. And if I'm not drinking my coffee the way I normally, you're thinking about it. It's all the mindset. It all kind of comes right down to the same thing. If you get these routines and you maintain that mindset when you sit down, there's not any extra thoughts going through your head about how am I going to approach today? You're going to approach the day just like you do every single day.
Yeah. I got to have that confidence. I think that's the hardest thing to build it's like shooting free throws or something. You need to think, you need to visualize and just think that I'm going to do this. I'm going to be right. I've picked the right levels. I'm going to execute on my strategy. And whether it's true or not, I feel like you kind of have to believe that. if you're constantly second guessing yourself or don't think it's going to work out, I mean, it's not that it's going to change. The market's going to do what the market's going to do, but it's going to change the way that you manage the position. People who are tentative tend to puke the winners way too quick, and strangely enough, risk more by just doubling down losers or trading from a place of fear of like, oh man, I hope this comes back so I can, make my car payment. That's not where you want to be. No.
Every trade you get into, don't think about it. All comes down. You can't think about the finances of it. If you're starting to bills, if you're starting to think, okay, I have 2 months of runway, I have to do this now to start to cover myself down the road and cover rent and pay for my car, you're in the wrong industry, because it comes, it goes. You got to find your chances when it's presenting the opportunity. And if it's not, you can't press it. You can't force the market to do what you need it to do.
Danny, and you mentioned that, and it's honestly very hard to do. When you've got these things building up, you've got to have separation. I mean, it's really easy to say, but it's very hard to do. But when you've got these, like I said, these things building up, you have an opportunity, but you can't jump on it like you'd like to. I mean, you got to take it slow. And that's, we talk about, slow and steady wins the race, and small profits add up. And I mentioned the foundation. It's got to be a process, and you guys are talking about it. It's got to be strategic, and you can't just blitz every 4 downs.
Yeah.
Good place. Well, now might be a good time there's a few more things that I wanted to mention before we headed out and give Eddie his last words. But listen, September's gonna be a big month for Topstep. There's a few things that we can't tell you about yet that I think you're gonna like. And also, we're doing Back to the Markets education classes. We finally have the dates. I can say it now. Hoag's gonna do Tales from a Coach the week of September 13th is a Tuesday and the 15th is a Thursday. Hoag's been gathering, kind of like we did today with Eddie, all the questions he's gotten over his decade plus of performance coaching at Topstep, and we're going to do 2 sessions where we kind of go through those, and you can ask your own questions. It should be fun. And then we're going to do a rerun of trading strategies the week after that. There'll be emails and stuff like that. Just wanted to start teasing that. Also, because we were talking about it before, I think this is happened one more time on the podcast. That is a real human skull behind me. And I just want to make clear that this is not my office, because it would be super weird if this guy who used to be a trader had like a skull that would speak to
this clerk.
Weird. So suddenly I would be the strangest. This is the strangest call Eddie's been on. No, my dad was a doctor, and so he just has that from back in the day. I hope that's why he has it. Danny, any other thoughts on our topic today before I let Eddie?
No, Eddie, thanks for hopping in here. This was
thanks,
fun.
Eddie.
It's always nice kind of like talking about the trading combine, because everyone wants to work through it, and you work with so many traders. It's nice to hear that perspective.
Well, that's cool. And guys, I really appreciate you putting this together and saying, hey, come on down and jump on and give us a little of what you got. But, it all comes down to accountability. Management is one of my favorite things. And it's about you. I mean, it's like, anybody that has a trading account, it's like you're the boss, you're the CEO, you're the one behind the register, you're the one making the product, you're the one sweeping the floors. And it's all about what you do. And you've really got to take it, break it down, and move forward step by step. Taking leaps and bounds, they're only going to get you in trouble. So, my closing words would be, just stay positive, stay focused. It's all about you.
Well, thanks, Eddie. And we'll have you back, some combination of you and Hoag and Mick and MP, maybe over a couple of days, and we'll get to the stories from around there once we clear them with our vast array of legal professionals. So thanks everyone for joining us. As I said, those classes are coming up. We'll be back next week. And as we always say, in signing off, Dan, I finished off when you said last time. You cut out right after you said it. So we end with a little
namaste
and trade well. We'll see you next week, guys.